Hi everyone, Stacy Whiter here on behalf of Campus Mortgage with part 2 of a two-part video series on HARP loan refresher. Now just a quick reminder before we get started, this video is for informational purposes only and should not be considered legal advice or used in place of Fannie Mae guidelines. Also, this video was issued on August 22nd, 2017, and the information contained in this video is subject to change without notice. So as we've already discussed, there are two types of Fannie Mae HARP loans, DU Refi Plus and Refi Plus. For this part of the video, we're going to review the Refi Plus. Now the purpose is the same for the Refi Plus, which is to refinance an existing Fannie Mae mortgage where the borrower does not qualify under existing guidelines due to high loan to value. There's still simplified documentation, and it must be a limited cash out paying off the current mortgage and including closing costs, prepaids, and points. Now, for the general guidelines, it's the same. Some of these are the same as the DU Refi Plus. So for example, there's no max LTV for fixed rate loans. Subordinate financing is permitted. 1 to 4 units on primary and investment, 1 unit on secondary, and most property types are eligible. Same thing for meeting the borrower benefit. Now it does get into a little bit of different guidelines here, which we'll cover in just a second. But just like the DU Refi Plus, the lender must determine if it's a high price mortgage, and waiting periods are waived for significant derogatory credit. So now let's take a look at what's different. Payment changes. If the P&I is decreasing by 20%, there are going to be additional requirements. If it's increasing by less than 20%, if it's staying the same, or increasing by more than 20%. So more than likely, if you're going to have a a Refi Plus, then it's going to be manually underwritten because one of these payment options is happening. So maybe you've got a scenario where the borrower is going from an ARM to a fixed rate to get out of that riskier product, and it's increasing their payment by more than 20%. So it doesn't automatically make them ineligible for the HARP. It just means that it's going to have to be manually underwritten as a Refi Plus. Now, another requirement that's different is the existing mortgage must be current. There can be no 30-day late payments in the last 6 months and no more than 1 30-day late in the last 7 to 12 months. Here is some other items that are different. Credit score and DTI. If the payment is increasing by less than 20% from their current, then there's no min or max DTI. However, if the payment is increasing by more than 20%, it's a 620 minimum credit score at a max DTI of 45%. For high price mortgages, regardless of what's happening with the payment, it's 620 and a max DTI of 45%. When it comes to income and assets, again, if the payment is increasing less than or equal to 20%, you only have to verify one source of income and you don't have to verify assets. But if it's increasing more than 20%, you have to verify all income and assets required for closing. All right, everyone, that's all for now. Thanks so much for watching. For more tips and videos, please visit campusmortgage.org and look for their weekly mortgage video tips designed for all mortgage professionals, including underwriters, processors, loan officers, closers, and post-closers. Have a great day. We'll see you next time. Bye-bye.